Good everyone. You're welcome to today's live trading session, our Wednesday London payouts here in IOC Forex Academy. So I'll be focusing on the dollar, the euro, and the CAD JPY for today. The GBP, the reason why I want to leave it for the meantime, because I want to able to give you the projections for what is currently on board right now. And this, like I told you last week, we experienced some manipulations by this candle. No, Thursday, yes, by this candle. So I want all these pairs, Euro USD, GBP USD, they are all bullish. They are all bullish. We have still not changed the order flow of the market space. They are all bullish. That's my choice. Okay. So they are all bullish, and I'm looking at this to go and take out this high here, this one first of all, and then this one, long term stand. So they are all bullish, and now we just look out for things like it coming to fill an imbalance and where is the current draw on liquidity, and we trade it up to everyone where we expect it to go. So I'm hearing one of the participants here saying that he traded Euro USD this week. Okay, so currently now we have this on the chart. We have this on the chart. This is our current validation. Like, if price breaks this high, we know that it's going for this one next. I don't want to put all my markers here first of all. So I'm just giving you the long-term view in price. If this high gets broken, we go for this. Before this live trading session, I told you that we are looking at this low being our invalidation. This low, that is last week's low, as our invalidation. We are looking at this low here as our invalidation. And I have been saying that the reason why we give validations and invalidations is not because of we don't have a foresight of what the market will do, but it balances everything for you, from your technicals to your emotions, your psychology. Everything is being balanced. You are not forcing the market, and a whole lot of mental errors people get from trading, it can all be solved just by a little bit of things, understand, that you have in your understanding. The reason why people have psychological barriers in charts when it comes to trading is because of how you think about the market. Everything goes on how you think about the market. Understand? How do you see the market? Do you see the market as something that is clear, black and white? If I know it, it must come out like this for me. If I don't know it, then it will come out like this for me. If my trade gets wrong, that means I don't know it. If it is like that for you, it's a wrong psychology. Understand? It's a wrong psychology. There are some things that you need to see the market for what it is. There is no one trader in this world. No matter how you grow, no matter how me, myself, I develop, I will not become perfect in this world. I will not become perfect as regards to trading. I will not always come in for a buy and all my buys will hit that take profit. I will not always come in for a sell, all my sell will hit that take profit. No matter how simple I will say it here, it's very, very important that you know it. Because when you start to look at the market as black and white, you will get so many things wrong in the marketplace. And I myself, I don't preach that to our students here. Understand? Yes, we have a high win rate. Like you can see our students here doing, you have a high win rate of getting the market direction. And even when you are wrong, you know when you are wrong and you can immediately turn sides and get on the right path. I've seen this concept better than anything I've traded before, as regard to indicators, as regard to the normal reading price action. Because when you get wrong, you don't really know how best you can come in again and get on the right side of the market. This is different. Understand? It's so clear and so precise. So we kept here as our invalidation, but now I'm telling that here is our validation that we are going for this high. If we take out this high, this is a low resistant liquidity run. Once we take out this high, this becomes a low resistant liquidity run because the market will just do something like this. Once it takes out this, it will just do something like this and it will go for the high. No doubt about that. But currently now, we had this retracement down from a monthly and a weekly level here. Now we have only filled a daily fair value gap and a weekly bullish order block. All these candles you are seeing here down, they formed a weekly bullish order block. So I'm going to show you right now. So you look at it here. These three candles, 1, 2, 3, is a weekly bullish order block. So look at the body of the candle. So, but I was expecting that the market, before this week, I was expecting that the market should come into this fair value gap and then look at it as a form of support to then buy going up. But currently now, we have just come into here. Understand? Those of you that land mean threshold, if you pin your candle from here, if you Fibonacci from here to here, you get the 50% around here. So that was where I was eyeballing in the beginning of the week, but we go with what the market is telling us at the meantime. So this is a weekly fair value gap. This is the bullish order block. The market went to fill and close a daily fair value gap and returned into that weekly bullish order block like we have here. Look at it here. So it's still below the 50% of the range, of the current range right now we are working with. It's still below 50% of it. So almost close to 60% retracement. So what are we to naturally expect right now? So everything we do here, we base on time and price. It's very, very important. We base our idea on time and price. It's very important. No matter the fact that you know the concept, you expect price to reach to a certain point, you must align time with it to be able to do what you want it to do. If you check your seasonal tendencies for the months of June, if you check your seasonal tendencies, you know that for the month of June, largely we are bearish as regards the dollar index. If you just check that, you know that we are bearish on the long term as regards the dollar index. So that's one thing about order flow, because where you want it to reach to as regards the bias, and you are trading the, you want it to come and fill an imbalance to a certain point. Most times it might not really give you what you expect like that because of the type of the market. It's reaching for a longer term quest for liquidity or filling an imbalance. What am I saying now? Now, I told you in the previous video I posted on the YouTube session, I told you that I was looking at three markets on the commodities market: the soya bean, the wheat, the grain market. I was looking at it and I saw that the grain market was bullish. Commodities, we are bullish. So naturally, I expect the interest rates, that is the dollar index, to fall. And that is these two, it should buy up to this point. Our invalidations, we are leaving that place. We are leaving it. Price is pushing away from it. So it's further more confirmation that we are going for this high and this high. But where are we to look at for now if we want to trade for today? That's why we are here. Okay. Does anyone have an idea? Let me just pitch in something. Does anyone have an idea for what we should be looking at? Does anyone have an idea?
On the dollar, or what we should be looking at on the dollar?
Yes, for now.
Okay. I have a little idea.
Okay.
So
Just tell
generally,
us your
what I
name.
think.
Tell us your name. Tell us
Okay,
the place you are talking from, and then we can give you an idea.
okay. I'm Uyema Glorious, and I'm from Port Harcourt. I'm a member of the IOC Academy.
Okay.
Okay, so my idea is we are going to, because on this daily you can see I'll call it a change of character on the dollar, and then we retrace back into discount on the dollar. So I expect, not generally,